Hello, I'm Mark Glowery from Allia C&C, and first of all, thank you very much for taking your time to join us today. I'm here to talk about the retail charity bonds program. We'll expand on that at some depth, hopefully. But before we do anything else, in line with all the rules and regulations, I just want to show this disclaimer. There's quite a lot of words there, but I think the important thing is to consider that I'm not a financial advisor. We arrange deals on the public markets. They are open to retail investors, but I'm certainly not your financial advisor. So anybody thinking of investing, bear in mind that this doesn't constitute a recommendation. Please always do your own research. All investments do carry risk, and they may or may not be suitable for you. And if you have any doubt, please speak to a suitably qualified stockbroker or financial advisor. Retail charity bonds. The idea is that we help charities borrow money. When it was first introduced to me, I thought, well, why would a charity wish to borrow money? It seems a bit strange. With charities, they have endowments and donations, whatever, but why would they want to borrow money? But the more one thinks about it, the more natural it is. Many charities are large organizations, businesses, if you will, and they use borrowed money in order to purchase assets, and those assets are important, or indeed integral parts of how they operate. There are many examples. So, for instance, an air ambulance would lease the helicopter, extremely expensive piece of equipment. Hospital trusts likewise employ borrowing, and housing associations, which provide a large amount of the housing in this country, will tend to operate balance sheets through borrowing from banks and also the bond markets in order to purchase and to build new accommodation. Now, traditionally, charities would have gone to banks to borrow money, and indeed they still do. That door is open. There are some restrictions. Banks tend not to lend very long. They also may place quite tough restrictions on what the charity may or may not do, and that can be difficult for the people running that charity to go about their work. So it was a good idea, we felt it was a good idea to provide the possibility of some non-bank funding for charities. Now, our parent company is Allia, and they set up this program, the Retail Charity Bonds program, in 2014. There had already been a few sort of small off-market bonds where supporters of charities had lent them money, often directly. But the thought was to build a slightly larger program with listed and tradable bonds on the London Stock Exchange that could be used to support a range of charities, and thus providing them with an alternative to bank funding, possibly more flexible terms, possibly longer terms, and that sort of thing. Our original thought was that this should be designed for retail investors, should have wide dissemination, and that it would be likely that the charities, many of whom have thousands of supporters, that those supporters might wish to buy some of the bonds. And indeed that did happen. And the retail investors and charity supporters are consistent buyers of these instruments. But actually, as the program grew, we found that more institutional investors were getting involved in it for a variety of reasons. There's a growth of the socially responsible investment funds, so they're actively looking for types of investments where they can put their money to work, where there's some defined social benefit that they can record and measure. But there are other reasons as well. Bond investors bond investors in the sterling market are always looking to diversify, to spread their risk around, and we found that after a while, just conventional fund managers were also buying and investing into these bonds because it was another investment. It added diversification. It was another sector. It was useful for them to have. So I think in general we've seen fairly strong demand since we started in 2014. And in addition to the private investors, the original target market, we've had impact investors, wealth managers, where people are not investing directly, but somebody's managing their money for them. Wealth managers have bought some of these deals, and also pension funds, self-managed pension funds have been buying them as assets in order to provide an income for the pensioners that they support. How does it work? Allia set up a vehicle called Retail Charity Bonds PLC. It is what's known as a special purpose vehicle. So its sole purpose in life is to act as a conduit for the borrowing. So Retail Charity Bonds issue the bonds, which are traded on the London Stock Exchange. They take in the money from the sale of these bonds to the investors, and they pass it through to the charity in question. Now, each bond is ring-fenced against the loan to that particular charity. So they all go through the Retail Charity Bonds platform, but each loan is ring-fenced to the charity. So there's no risk of cross-contamination between one charity and another. You can't have funds or risk from one bond being associated with another charity. It's all kept very, very separate, which I think is important. Now, it is a selective process. There's not just a case of lending money to anybody. The Retail Charity Bonds only really lends to charities that are asset operators who have assets which are bringing an income. The classic example being a housing association, but there are others. But we do look for strong social benefit. We certainly look for a sustainable business model. These bonds are 5 to 10 years, so we need people who are going to be operating for quite a lot longer than that. And we certainly look for motivated, high quality management, and we do indeed find it. There's some very good people in the charity sector. This is supported with credit analysis, and the board of Retail Charity Bonds does reach out and gets an external credit review of the charity before we bring a new bond to market. It's not to say it's without risk. All investments have risk, but nevertheless, we're looking at these things pretty closely. Now, we generally structure the bonds to meet the requirement of the borrower. That's why they're coming to us, because we can do something perhaps that the banks can't. We are typically arranging unsecured debt for them, which means it's very flexible. So in the case of a care home provider, they can use the money to go out and build a new care home. It's cheaper and it's more flexible than conventional mortgage lending. But we do try and make sure that there is some comfort for the investors here, and look for all the charities using the program to have unencumbered assets in excess of the bond, and we demand 1.3 times asset test. So they must have more asset than the value of the bond in order to protect the investors there. In terms of the coupons, and of course the coupon is the amount of interest a bond pays every year, they vary. They vary for two reasons. They vary depending on market conditions, and they also vary on the creditworthiness or perceived creditworthiness of the charities. So some are perhaps safer than others, and the safer ones tend to have a lower coupon, and the ones which have perhaps a little bit more risk associated with them will tend to have a higher coupon. And so far, the coupons paid on these bonds have been set at between 3.9 and 5% per year. So far, they've all been in the 5 to 10 year maturity range. We might do some longer ones. There has been some demand for longer ones from the issuers, so that's a possibility going forward. But so far, 5 to 10. So that's how it works. Let's talk about the timeline when we started and what we've done, where we've got to. We'll go through all of the issuers, just to give you an example of the type of people who are utilizing this program, and the sort of people that, if you chose to invest, that you would be lending money to. But also we'll have a little look at the types of investors that are coming to the deal, because I think that always gives one a good idea of the nature of investment, to see what sort of people are investing here. There's a couple of photographs here on the screen of our launches on the London Stock Exchange. If you put a new security on the stock exchange, you ask them nicely, you can come and open the morning session. You stand on the balcony and you press a button, which they tell you to press the button to open the stock exchange, and a bell goes off. It's quite exciting. I'm fairly certain the stock exchange actually would still open if you didn't press the button, but anyway, that's what they tell you. I think you can possibly see my left ear on the corner of the top left picture there, but it's quite good fun to go to the stock exchange. Okay, history and timeline. We started in 2014, and we have launched 9 different bonds now for 7 different charities, because 2 of the charities have come back and used the platform twice. They found that this worked well for them. They're getting the right sum of money at the right price, and it was the execution of the deal was satisfactory for them. The bonds have all been between 10 million and 50 million in size. We can't do a deal below 10 million for a variety of reasons, stock exchange rules, inland revenue rules. So that's about the minimum size we can do, which does mean some of the very small charities or small charities obviously wouldn't be able to access this program. It's really for the mid to larger size charities. I think, as I've already mentioned, coupons have been between 3.9 and 5%, and maturities 7 to 10 years. And if we look at the chart on the right side, you can see we started very, very small. The first issue was just £11 million, and we have gradually increased in size, and now the full outstanding amount is 287 million. So it's been a reasonable success in its ability to raise finance for charities, and we expect it to grow. We certainly hope it will. Okay, here's the history. The very first bond is at the bottom right-hand corner, the Golden Lane Housing, which is the subsidiary of MCAP that provides housing for mentally disabled individuals, normally living in small community groups. It's quite well known, been around for a long time. The first one was just 11 million. It's quite exciting doing that. We weren't quite sure how it was going to go, who was going to buy it, but it did. And then we moved on from there. We've done a variety of different types of charities, housing associations, and things that are like housing associations have been very frequent users of the platform. But there have been a few other ones. Care homes, we've had 2 issues for care homes. And the most recent one we've done, so quite unusual, is the Alnwick Garden Trust, situated up there in Northumberland. We did a deal for them in March. But we'll go through some of these on a sort of case-by-case basis. Issuers. First one, Golden Lane Housing. So Golden Lane Housing provide housing for mentally disabled people. Their rent is covered by housing benefit. They normally live in small groups with a carer in the house, so maybe units of 3 or 4 tenants and a carer. That's the typical kind of structure. They buy existing properties on the whole and convert them to their needs. They do some development for specialised properties as well. So we're going for a long time. It fulfills a very clear social need. And our SRI investors, our socially responsible investors, really like this organisation and this bond. And the reason is it's thoroughly transparent what's happening here. We're organising the bond, which raises £11 million. The money goes to Golden Lane Housing, who then go out and buy housing, convert it, and put tenants into it. And the numbers they stated after the deal was that the £11 million bought 30 homes, which probably includes conversion costs, I'm not too sure, but that allowed them to house 100 people. So you could see quite quickly the movement from investing the money through to the impact in society and of course provision of homes for these people. And in fact, they can use it twice. So the first bond, stock exchange ticker MCAP, MCAP, was a 4.375 2021, which we issued 6 years ago, just 11 million. It's actually due to mature next year. So next year, the people who invest in that will receive their money back. Maybe we'll issue another one. Maybe they'll invest. We shall see. And the chart below gives a little bit of an idea of the price history of this bond since launch. It's launched at the price of par, which is bonds are normally launched at 100, and they redeem at 100. So you put in £100, you get £100 back. But in the meanwhile, the pricing goes up and down depending on supply and demand and market moves. And this bond has traded somewhere probably between about 112 at its very highest point, and quite recently during this really severe market crash we had in March, down to a price in the low 90s. So that's the kind of range. Not perhaps as volatile as an equity if you're used to equities, but nevertheless there is some movement in the secondary market prices of these bonds. They came back a few years later, in 2017, I think it was, and launched a second bond. This was for 18 million, but actually we only placed 10 million, and 8 million were retained. So Golden Lane hold those bonds back for utilisation at a later point when they need the money. And you'll note the coupon here was a bit lower. The last one was 4.375. This one came on a coupon of 3.9. It reflects market conditions at the time. And it also reflects, I think, investors are more used to Golden Lane. They'd seen the last bond trading, quite well for a few years, and therefore they're prepared to accept a lower coupon on that particular issue. And slightly shorter trading history here, but you can see that again launched at par, moved up to a bit of a premium, sold off quite heavily recently, and has now recovered back over the par price point. Another borrower, Hightown Housing Association, reasonably well known, Hertfordshire-based housing association. They operate around 6,800 homes. They have a quite strong social agenda. So in addition to that, they do a lot of outreach work with homeless people, and that they're also very keen that everything they build should be social housing. They don't do development for private sale, which some housing associations do that as well. But they develop in order to add to the social housing stock. And they build about 500 houses a year every year. So they've got a pretty intensive development program up there in Hertfordshire. Now, one interesting thing about Hightown, if any of you work in the bond markets or familiar with the bond markets, and I know some of you are, is when we did the deal, Hightown Smaller Housing Association had no credit rating. It has actually subsequently been issued a credit rating of single A minus, suggesting this is quite a reasonable credit. We can have a look at the two bonds. So the first one came with a 4.4% coupon, 2025 maturity, issued that back in 2015, 27 million issued. That's a relatively small deal. And price history sort of quite similar to the other price histories we've seen. They don't all trade exactly together, but there are similarities. So launched at par, some up and down price movements. You can see with this one, actually, it dipped a bit below par after issue, and that can certainly happen. Spent most of its time above the issue price, still off in March, and it's last trading around the par price point, so in the secondary market on the exchange. And Hightown H2O2 on the stock exchange came back for a second bond issue a little bit later. You see the same trend here, the coupon slightly reducing as time goes on, just 4% here, largely reflecting, I think, sort of lower interest rates over the period. New sector, we did a retail bond for Greensleeves Care. Interesting organisation, used to be part of the old Women's Volunteer Reserve Service, and the WVRS had its own care homes, which it spun off into a separate charity called Greensleeves some years ago. And they operate a pretty high quality bunch of care homes, mostly in the southeast, and they are primarily for private users. They do accept some residents from the council, but normally, they're probably sitting in the upper quartile of the care home sector. It's normally private residents that are in there. Excellent care, and I've been around and seen several of those care homes. We did a bond for them, and at 4.25% March 26, which we launched in 2017, and that replaced all their bank debt. They had some bank debt before that, took the bank debt out, and now they are all the debt is represented by this 50 million retail bond, which is one of the larger retail bonds that we have done. Okay, another care home, Belong. These guys are dementia specialists, and they have their own model of looking after people with dementia. And they're very good at this too. They believe in including them in all aspects of communal living. So people generally live in their own units, but with a communal living area, and they're involved in cooking and socializing, rather than, the idea is not to treat them as patients, but to treat them as people. So they have quite advanced methods of dealing with dementia sufferers, and it can range enormously, of course. And some people have very mild, some people it's more severe. And you are also able to purchase flats within the units, which is very useful for married couples when maybe one is suffering and one is not. And Belong at the moment has a program of development which has really spurred the requirements to borrow, because they build purpose-built facilities, because there are issues around these illnesses. Purpose-built facilities generally in the community, in town, just off the high street, that sort of thing. So just to keep people living in the community rather than just pushing them out into sort of a home in the middle of nowhere, which can be the case with some care homes. So really high quality organisation there. The bond was issued in, I think, 2000. My memory's terrible. 2018, I think. 4.5%, 2026, and 50 million bond with 15 million retained, and that's been trading on the stock exchange. We'll have a look at those prices. I think that was just a little bit below par. At the moment, I think investors have some concerns with the care home sector, because obviously we have COVID-19, which has caused a number of deaths. It has gone into some of these care homes, which is obviously very unpleasant, but that's causing some trepidation amongst investors, hence slightly lower prices on the market. Charities Aid Foundation, completely different organisation here. They are very unusual in terms of they're really a financial service provider for charities. They assist people with collecting money. They operate things like the Give As You Earn scheme, so you can donate a piece of your salary on a regular basis through to them. They assist donors with donating in a tax efficient manner, and they also operate a bank, Charities Aid Foundation Bank, which in itself makes loans through to charities. They required some more capital. I think at least in part because of they require capital to help fund the bank, which sits as a subsidiary below the Charities Aid Foundation. So we launched a retail bond for them. This one had a slightly higher coupon, 5%, 2026. The sort of thought at issue was that as a financial service provider, even though it's a charity, there's more risk associated with financial services, and people were looking for a slightly higher coupon. But interestingly enough, it was very, very well received by the market, and it's just consistently traded at quite a high premium price ever since. It's a very popular bond. Dolphin Living. You may or may not be familiar with Dolphin Living. They were spun out, or they received a large endowment for the Dolphins Square development, which you're probably familiar with. They're not sort of quite a conventional housing association. Their charter is to help house workers in the Westminster area, specifically workers in the Westminster area, and it's environ. It's based on a kind of odd demographic decision rather than purely linked to income or other requirements. They have around 630 homes. I have visited some of them. They're not all in Westminster, so I think the stipulation is they have to be commutable to Westminster. So I went to see some of their homes in Fulham, for instance. It's a nice modern small block of flats. I think 2 or 3-story flats there. So they provide high quality accommodation for workers in the Westminster area. And another one of these charts, which gives you a little bit of the idea of the price history. Bond's only been trading for 3 years. As you can see, it's launched at par, some price volatility, probably back a little bit above par now. The last one, Alnwick Garden Trust, really nice organisation, based up in the northeast, run these wonderful gardens. They wanted to expand the offering. They wanted to add a children's play area called Lilidori, for which it's all planned and designed, and they need to put the funding in place for that. And because of that, they came to us. We organised this bond for them. It's just a relatively small one, £10 million, which we did just as the COVID crisis was hitting. So we weren't quite sure how it would trade in the secondary market, to be honest. Nobody knew anything at that point, but actually it's been remarkably stable. And since launch, it's been seen as a very modest turnover in the bond, just sort of above the par price point. Okay, so there's a table here, which my colleagues put in for me. I think it says recent price and yield. They're fairly recent. It's from the 15th of June, so it's actually last month. I don't think things would have changed enormously since then. You can see all these prices on the London Stock Exchange website or on your stockbroker platforms or whatever. And the tickers are down on the left-hand side there, which will help you find them. They're mid prices. Obviously, there are bid offer spreads if you're dealing in the secondary market, which can increase the cost of dealing. But this will give you some sort of idea of where things are sitting. Generally around the par level, around the 100 level. Some outliers. We have the CAF bonds up, very high price there, 116 nearly. As you'll be aware, if you're buying a bond in the secondary market, the higher the price, the lower the yield. You get in at a lower price, you'll get a higher yield. And the column there shows the what we call the YTM, the yield to mid or yield to redemption. So that'd be a combination of the coupon that you receive and any gain or loss, capital loss from a premium or discount that you've achieved by buying the bond. So let's just clarify that. If you buy a bond with a 4% coupon at 100, the yield you're going to get is 4%. But if you were to pay more than 100, that 4% yield would be diminished. It would drop below 4%. If you were to buy a bond at a discount below par, then that yield would be boosted by the fact that you've bought it below par. And I think you can see that's represented on the table. I just repeat, I did mention that with the care homes, people investors currently have some concerns around care homes. So we can see both the Greensleeves and the belong bonds trading at small discounts to par. And I think those facts are related. Okay, well, what sort of investors buy these bonds? Well, a fairly wide variety is the answer. When we look at this investor base here, we've got it's split by numbers of investors and by the volumes. Volume might be more important. But the first thing is to consider that there's a lot of people. So we've recorded 61 intermediaries over the years that we've been distributing these bonds. And those intermediaries may be stockbrokers or investment platforms like Hargreaves Lansdown, that sort of thing. So they in turn will be distributing to loads of different investors. We're effectively wholesalers. We take the bonds and we distribute them, and those kind of platforms will distribute them to private investors. And our calculation is slightly back of the envelope, but we believe there's over 1,000 underlying investors in this program. What sort of pieces do they buy? Well, you do sometimes get pension funds coming in and buying quite large amounts. They might buy a few million, for instance, of one of these bonds. But private investors typically come in and buy units of between £2,000 and £10,000 of one of these bonds. You can actually buy small amounts if you want to, but that's the normal range. And one of the reasons that people are doing that is because they're diversifying. They're buying a lot of different investments, so they'll just have a smaller piece of this and a smaller piece of that, and maybe build up a portfolio of which one component might be one or two of these retail charity bonds. It's always important to diversify from a risk management point of view. We can see the split there. We have ethical investment funds, we have pension funds, retail investors, wholesale, by which we kind of mean professional or intermediated accounts, and XO stands for execution only accounts. So that's the investment platforms where you can go online and buy these bonds. Do people buy them as new issues? Do they buy them secondary? Well, both is the answer. The new issue route is pretty popular. With most platforms, you're able to buy new issues without paying commission. You just buy them at the price. So that's pretty convenient. It also tends to be the maximum point of liquidity, and there's no bid offer spread at that level. So many investors actually just buy them at new issue and just hold them for the income to maturity. But there is turnover in the secondary market as well. A bit more about the investor base. 70% of those investors have bought more than one issue. So there's some evidence that people are quite happy with this, and many of them have bought lots. I'm fairly certain we've got a couple that have bought them all. But anyway, see. Okay, what sort of investors have we got? We can't reveal all investors of confidentiality. But in many cases, it is a matter of public record. So particularly with a lot of the large funds, they produce regular reports and annual reports, and they tell you what they've been buying, quite rightly. And you will see the retail charity bonds as a component in some of these funds, and particularly in the ethical funds. And there are some well-known players here: Eden Tree, Columbia Threadneedle, Rathbones, and Royal London, all excellent and well-run funds, and there are others as well. the funds are worth thinking about as well, because if you're a private investor and you say, well, I don't want to buy the individual bond, I probably have to, do too much work and have a look at the risk or whatever. You could buy a fund, in which case the fund manager is diversifying the risk for you, and also he'll be doing some research and diligence. That's another way of accessing the program. You can invest directly, or you can invest through a fund. Obviously, you invest through a fund, there are going to be some charges associated with it, but you will have the benefit of some expert management and some built-in diversification there. In addition to the investors, and this is by no means all the investors, there are the market makers. So on the London Stock Exchange, there are professionals who call themselves market makers, whose job is to provide liquidity and make prices in the secondary market. And there's three organisations there who are consistent market makers in these securities. One is Canaccord Genuity, the other is Peel Hunt, and the third is Winterfloods. And these guys are making prices which can be seen up on the screen. Distributors, I touched upon that earlier. This isn't all the distributors, but this is an example of some of the distributors. So they include sort of larger platforms: Hargreaves Lansdown, AJ Bell, EQI, the old Equinity. And these are online platforms. We speak to them during the new issue process. We'll make the bonds available on their platform so that their clients can put an order in, and the bonds will flow through into your account that way. And they'll also enable dealing in the secondary market for you if you wish to do that. It's not just those larger online platforms. There's all sorts of other stockbrokers that get involved. A couple of examples there of some more regional names like Redmayne, Bentley, and Headley. But actually, most stockbrokers can or will do it. Sometimes they're occasional dealers, and if you ask them, I think pretty much any stockbroker will be able to interface with us over the new issue period. Coming towards the end, sort of a note from our sponsor. I've told you about the retail charity bonds, about the type of the purpose of it, and what type of charities use it to borrow money, and indeed what sort of investors are involved in the process. Just a short note about ourselves, Allia C&C. We're fixed income brokers and lead managers. We're located in the City of London. I'm currently sitting in Cheapside in a fairly thinly inhabited office. I think there might be 4 of us in here today. We are controlled by Allia, which is in itself a charity, and Allia has long been special in providing finance for charities and ethical-based organisations. We typically work in less liquid debt, such as retail bonds, sub-benchmark transactions. Issues with social impact are something we're consistently involved in. And in addition to the retail charity bond program that we operate, we have other things that we do as well. We have a program in Scotland for financing housing associations up there. We're involved in wholesale financing for the larger housing associations, and also some smaller deals, even smaller than retail charity bonds, such as community bonds and other finance programs. And we are authorised and regulated by the Financial Conduct Authority. We're going over to questions and answers. So I'll hand back to Tamsin.
Mark, thank you very much. So we'll go to Reg Hoare.
Hi, Mark. As you kindly asked a question in my webinar, I thought I should return the compliment. Is there a potential pipeline of new launches that one might expect sort of through this year, or do you think it's more likely that it'll be next year given sort of current circumstances? How do you see that?
It's slightly hard to tell. We tend to do about one a year. We did do one in March. There are currently people we're speaking to, so I think there's a reasonable chance of something coming along in the near future. I'm not always privy to that information. If I was privy to that information, I'm not always allowed to disclose it. But I think we expect a reasonably constant flow of new issues for this program.
And would you expect the coupons to be not dissimilar going forward, given where sort of rates have fallen a bit? So I don't know whether that is good or bad news in terms of coupons.
From an investor's point of view, it's sort of rather bad news that the coupons are falling, but it's better news if you're the borrower. I think they'll be comparable. It's going to depend on who the charity is, who the borrower is. But they're going to be something close to where the bonds are trading in the secondary market, and a lot of them are kind of around the par price point at the moment, suggesting that the coupon levels will be comparable. They're kind of in that mid space, 3.9 to 5%. It's not a high yield, but it's a reasonable yield, particularly in an environment where it's very hard to get any form of income.
And Rebecca Stewart has a question. She asks, how large do you believe the charity bond market can be going forwards in terms of the number of charities launching bonds and the size in pounds?
Well, that's a very good question. There are some huge charities out there, like the big housing associations, that do great big issues of £250 million. And there's also Wellcome Trust did some vast issues some years ago. So actually, and universities, many people charities issue debt, although some of them are struggling with that. Anyway, that's another story. We kind of operate more in the mid space. We've taken it up to about 280. We believe that the growth should be fairly consistent. So give us a few years, it would be entirely possible to double that in terms of the retail size of the retail charity bond program.
And we have a question from Paul Hawkins. Paul, go ahead and ask your question.
Hi, Mark. Thank you. Interesting sector. Could you tell us about, you mentioned credit analysis. Obviously, these aren't rated by what's regarded as a well-known rating agency. Who does this credit analysis review? And then also, do you want to talk us through what retained bonds are?
Yes, sure. Well, the answer, you are correct that they are not rated by the conventional credit rating agencies, so Standard & Poor's, Moody's, Fitch, that sort of thing. The Board of Retail Charity Bonds does ask for credit rating, or not credit rating, a credit report from a variety of independent agencies as part of their due diligence test. I did mention Hightown, which has actually picked up a rating from one of the main agencies since we've issued. That's not a rating for the bond; that's a rating for the issuer itself. I think obviously people are always mindful of credit ratings. It's great to have a credit rating because it means that somebody's monitoring it and seeing whether the situation is getting better or worse. With these particular bonds, it is important that investors are able to understand the risk and maybe have a look at the report and accounts and make their own judgments about the particular risk.
So is that available to potential investors?
No, I'm afraid it is not. The credit reports are confidential and produced for the Board of Retail Charity Bonds. We don't make them available for investors. I think it might be an interesting move to sponsor such research going forward. There would be a cost associated with it when we're not quite there at the moment, unfortunately.
So if let's just say I was coming into this topic completely green and wanted to buy some bonds, of which a lot of people after when I spoke said, oh, we want to buy bonds. How can they create for themselves an informed view based on just looking at report and accounts from a standing start?
Yeah, I think that probably when the bonds come to market, there's two documents produced. There's an information booklet, which is short form, and there's the prospectus, which is a very long document. I'd start with the information booklet and have a read through that. I would also then have a look at the website of the particular charity. I would have a look at the report and accounts. I would read that pretty carefully and make myself comfortable with it. I then look for external views on the matter. It's harder to get external views now than it used to be. A few years ago, quite often you'd be able to access brokers' notes, and there'll probably be more coverage in the financial press about retail bond issues. That is becoming harder to come by, unfortunately. But I would certainly look for coverage by financial journalists, and there are a number of people who will write about such issues: David Stevenson in the FT, Joanne Hart in the Daily Mail, and see what they think. I think it's if you have access to a full service stockbroker, do ask them as well, because some of them may be doing internal credit work that they will be able to share with you. So I hope that answers the question, Paul. It's not easy, and a lot of it does boil down to either doing your own research or seeking advice from somebody who's suitably knowledgeable.
I mean, I suppose I'm just asking the question from the perspective of most people will be overfaced by a prospectus. So, in you as your capacity as retail charity bond issuer PLC, do you not provide any help to potential investors?
Well, we've got to be a bit careful not to provide advice to them. That's for sure. And we certainly provide the information booklet. We do have a full roadshow where we go out and speak to a variety of investment advisors, have set up meetings with management. So those guys within the profession are looking at it pretty hard when it comes to launch, but it's not open to the or that process is not open to the general public. There are occasionally informational videos that are also provided along with the launch, but it does largely boil down to doing your own research. We'd be keen to improve that kind of information flow. So all feedback on how best we can do that would be very helpful.
Yeah, do you want to talk us through retained bonds? Because I think a lot of people won't really understand what's going on there, and it's confusing when you see so many bonds are issued and so many are retained for most people.
Yeah, fair enough. So when the charity comes to market, they might have a requirement for so much money, and they can see they know they're spending. They've got some development plans, and they might say, well, look, we need £37 million to build this set of care homes or whatever it is. But they might also have plans that go further out. They might be acquiring land in the future, or know that they will acquire land in the future and have longer term development plans. But they won't necessarily want to draw the money down now, because they'd be paying the interest rate on it and not using it. So there's a facility called retained bonds, where what we'll do is we'll say, let's just say the bond is 50 million in total size. Only 37 million will be placed for the market. 30 million will be held back in the treasury of the organisation for sale and placement at a later date. So those bonds are basically non-operational. They're just sitting there within the treasury, and we'll look to place those with investors a couple of years down the road when the requirement is there for the money. And we've done that a couple of times. We've gone back into the market, spoken to investors, and say, look, we have some more bonds. Would you like to invest, top up your investment, or maybe speak to new investors, and they can come in and buy those additional bonds. So it's I guess we're selling more of the same.
Thank you. And then I think one final question that I think most people would want to answer, which all good bond investors want to know: what happens if it goes wrong? Because this is unsecured.
Yeah,
how do you reconcile the fact with, as a bondholder, going to try and recover money from a charity might be both difficult and not what people want to do, but the fact is, if they lose money, what happens?
I think that's tough. I mean, the first thing is we hope we wouldn't get there. So we do try and choose charities which are stable, which are well run. I think I touched on it earlier. One of the stipulations is that there is a test that any borrower should have 1.3 times unencumbered assets. So if it is a housing association, there should be sufficient assets there to cover this bond. So if push came to shove, there would be enough money to cover the debt. But we'd rather hope that we'd never get there. And we speak regularly to our borrowers. They produce annual reports and accounts. It's RNS through the stock exchange. It's a very transparent process. So investors are also able to monitor the situation of that charity.
Thanks very much. So we have a question from Keshan Pawn from Eden Tree, following on really from that, saying, what's the criteria for a charity to be able to raise debt through retail charity bonds? What would you have to see so that you would not raise money for them?
The very first thing is they have to be an asset operating charity. They have to have stable assets and stable sources of income. What we definitely don't want to see is a situation of deficit funding, of somebody coming to us and saying, we want to borrow £10 million because we want to just spend it or distribute it. That's really not going to do anybody any favours. So that's the first thing. The charity has to be the right shape. It has to have a stable track record. It has to have good management in place, and we have to and we look at the numbers, and we check that these guys basically are going to be able to afford it.
One question from me, Mark, and that is that the volatility of bonds during March surprised me, because I always thought that bonds worked in an opposite direction to equities, or certainly were a lot less volatile. Can you comment on that?
Yes, I think that's a very good comment. I think there's a variety of things here. Firstly, it was a pretty sharp sell-off in March, and a lot of people were just a dash for cash, and were in some cases were selling assets sort of regardless of their nature. The next thing is that these aren't gilts; these are corporate bonds, so they carry credit risk with them. So, and particularly as they're smaller organisations, they tend to be a bit more equity correlated than bond correlated. So they tend to move with swings in investor sentiment with the equity rather than swings in investor sentiment on gilts. That volatility was pretty extreme. We haven't seen anything of that nature beforehand in the charity bonds. There was not an enormous amount of volume associated with it. Prices were marked down very sharply by the market makers. There were some trades that went through at those low levels, but not much volume. So it's certainly pretty alarming to look at. It was to a degree an opportunity for secondary market investors to come in and buy them if they were able to do so, and some people did manage to pick up some stock quite cheaply. But it was disconcerting, and I think I would rather it had not happened. Let's put it that way. But we live in strange times.
Do you think we've got to accept that volatility will continue going forward if there is massive equity sell-off?
I think volatility has increased generally in the financial markets for a whole variety of reasons. The speed at which people can deal online, the fact that there is less capital sitting within the market maker balance sheets nowadays means that I think volatility is probably here to stay in a whole range of assets.
Thank you. That is the end of the questions. Do you have any closing remarks?
Well, really, just thank you all for joining us. Thank you very much for your informed questions. If you want to know more about retail charity bonds, please do go to the website, Retail Charity Bonds, which you'll find on the internet. And there's loads of more information about them there. You'll find report accounts, RNSs, you'll find social impact reports, which they produce every year. And if you are interested in engaging them, do contact your stockbroker or have a look online. We can help to a degree, but we certainly can't provide investment advice, unfortunately. So thank you very much for your valuable time.